All right. Hi, everybody. All right. The big question for today is, when was the last time you looked at your financial position? When was the last time you analyzed your cash flow? When was the last time you looked at how much cash do you have coming into your bank account and how much cash is going out? When was the last time you looked at the rate at which that cash is coming in and the rate at which it is going out? Yes, of course, we all know how to open up our bank account. We check our bank balance every day and we're like, okay, whoosh, I hear you. You're not overdrawn, right? You've got money in the bank. You're looking at your bank accounts. You're super happy. You've got all this cash. You did really well for the week. And then wait a minute, all of a sudden, you've got some big expense that comes up. Something unexpected happens, right? Your roaster breaks down. You all of a sudden need to repair your overhead fan at the bistro or at your restaurant. What else could you happen? You have an employee who needs some help and you want to help them out. So you want to give them an employee loan, maybe for $1,000 to repair a car. Maybe your own car breaks down and you need to go and fix your own car, and that $1,000. So all of a sudden, all this cash that you thought you had and you were anticipating to keep and pay yourself, something else has come up and now you can't pay yourself. Well, I want you all to take the opportunity as we approach the year end of 2022 to go in and look at the rate at which your cash came in during the year and at what rate it went out. Now you can look at this pretty quickly. You can look at, okay, in my bank account, I had $20,000 in deposits and I had $25,000 in payments out. Whoa, that's a $5,000 net negative, right? So how are we going to correct that? Well, you may have had some cash, right? Like you may have started the month with $10,000 in cash. So you started with 10, you added 20, therefore you had 30, and then you spent $25,000 and all went out. All right, well, what did you spend it on? Okay, we talk about how we want to have all of our cash come in. We want to pay ourselves first, right? Profit first, sales minus profit equals expenses. But we're not quite sure where all that cash went. So again, go in, look at your spending habits. Analyze where that went. And maybe not even analyze, maybe that's like too big of a word. Well, let's just go in and let's just do a little checklist, right? Okay, we had rent, we had payroll, we had my own payroll. Yes, you paid yourself. Congratulations, I'm so happy for you. We had cost of goods sold, we had supplies we had to purchase. We had a big coffee bean purchase, we had cups, we had lids, we had maybe not straws, right? We're getting away from straws these days. We had napkins, we had other food that we supply to our clients when they come in. We have croissants and we have bagels and we have muffins and we have protein bites, all these delicious things that we're supplying to our clients at our coffee shop. That's where all our cash is going. But what I really want you to work on and look at in terms of your numbers is, was there cash that you paid yourself? Maybe it was actually not a direct check that you wrote to yourself. Maybe you had, you have your phone bill because, you're always on your phone talking to your clients, scheduling, talking to your employees. So you're using your cell phone as a business expense. So your business is paying for your cell phone. Well, yeah, that's a benefit that you get as an owner. Your business is paying for your cell phone. Good for you. That's great. But that is something that if you didn't have the business, you'd pay for that yourself, right? You probably still have a cell phone, even if your business didn't cover it. So think of that. Those little small things, those items are benefits to you as the business owner, that if your business requires you to use your cell phone day in and day out to run the business, well, that's your business expense and your business is paying for your cell phone. But today we're really talking about understanding where the cash is coming in and where the cash is going out and making sure that that is a net positive number, right? We want to have the cash coming in greater than the cash going out. So therefore we can look at our business and say it's profitable. We are having the ability to pay ourselves as the owner. And I really want you to look at the cash going out and then prioritize yourself. Prioritize you as the business owner, making sure you are paying yourself. Make sure that the business is rewarding you as the business owner. you put all your time and energy, you really sink your heart and soul into your coffee roasting business, into your coffee shop. You're showing up every day. You love talking to all of your clients. You bring them so much joy in every cup of coffee. And I want you to get benefit from that as well. So again, as we're approaching the year end, maybe we didn't do it perfectly this year, and that's totally fine, right? But we need to make small little improvements. And one of the first areas that we can look at is really looking at where did the cash go during the year? What did we spend our money on? Did we spend money on ourselves? Did we pay ourselves? If you did, congratulations. If you didn't, all right, let's look at the expenses and identify areas that we can improve next year so that we can start paying ourselves. Start paying yourselves in small increments, right? Again, small business ownership, running a coffee shop, running a roastery, it's a marathon, right? We've talked about this. It's a marathon, not a sprint. It takes a while. Think about it also as like turning one of those big cargo ships, right? We can't just turn one of those on a dime, right? It's not like we're in a little jet ski, zoom in and out, right? We're in this huge cargo ship and it's going to take a long time to turn it. We're running a marathon. We're running 26.2 miles. We're running our own business, and it's going to take time for the business to successfully pay ourselves if you've been running the business for years where you haven't paid yourself. So be patient with yourself. Be patient with your business. Start making small incremental steps so that you can pay yourself. Again, analyze your expenses, what cash came into the business, what cash went out, and identify opportunities to be more efficient and more cost effective in 2023. Look at areas where you can put more money aside for yourself. Pay yourself a little bit more, an extra $100 a week, an extra $400 a month. All of a sudden, you have more cash in your pocket, more cash as a business owner as you bring more joy to your clients. And this is an opportunity to also look at, all right, what are some of the goals that I have for the year ahead? Are we going to launch a new menu item at the coffee shop? Are we going to do something more crazy with our coffee beans? Are we going to redo our coffee bag this year, right? What are we doing in terms of marketing? Are we going to start showing up at farmers markets going forward? So these are all other areas to consider to help the cash coming in that allows us to have positive cash flow at the end of the week, the end of the day even, right? The end of the day, the end of the week, the end of the month, the end of the year. So at this time next year, when we're back here again, looking at our financial performance, looking at our cash flow for the year, we can say, yes, Kim, I paid myself. I took the opportunity to run my business so that I derived as much joy from my business as I am giving to the business, right? So yes, right? You're giving your heart and soul to the business. Allow the business to give something back to you. So everybody, take this opportunity. Year end is coming. We have a whole new year ahead of us. Think about what you want 2023 to look like for you, and think about paying yourself first in 2023. All right, everybody, enjoy, good luck, and keep brewing up your business.